Folks, let's just figure out what's going on in this market today. In this video, I'm going to go over the defensive sectors and the sectors that are more risk on or on the offense side. It's been a hell of a year. We've had a start to the year where we ran up into February, sold off into sort of Liberation Day with the tariff announcements, all the way into a down move into May. And then we started an uptrend after the one big beautiful bill was not only passed, but was being talked about and promoted all the way into the July timeframe. Now, since then, we've seen an amazing run up in the tech sector. There's no doubt about that, and the indexes. But in this video, I'm going to go over those three different sectors that are on the offensive side of things and the three different sectors that are on the defensive side of things. And this is a really quick way to get an understanding of what exactly is going on in this market, more like a sentiment indicator. So dive in and watch this video right now so you can learn it too. All right, folks, thanks for tuning in and watching this video. Now, this is really important. We're talking about risk off versus risk on. And on my screen, you can actually see there are three panels here. The top one is the healthcare sector versus the S&P. These are ratio charts. Now, watch my previous video. We talked about that. But when you're looking at a ratio chart, just a quick reminder, the first symbol is really what the direction is showing, what the direction of the ratio is. In other words, in this one, it's XLV versus SPY, the S&P 500 ETF. This has been obviously on a downtrend for most of the year, if not the entire year. Now, the second panel is the consumer staples sector versus the S&P, a very similar look. And the bottom one down here, if I can see my cursor moving around, is the utility sector versus the S&P. A little bit better, not terribly, from a downtrend, but really selling off again versus the S&P. Now, all three of these sectors are up on the year. The S&P is just doing better. So, from a relative strength standpoint, you want to try to look at both of these, sides of the ball. In other words, you want to look at the offensive side and the defensive side. These are the defensive sectors. This gives you a quick sort of temperature test about what's going on in the market. If the defensive sectors are trending lower, which they are, versus the S&P, you're typically in a risk-on environment. You get it? So when you're taking risk, you're in more like technology, which is obviously a risk-on sector, communications, and consumer discretionary. So remember the two differences. Discretionary are wants, consumer staples are needs. And so people are trading more wants, buying more wants than they are needs. Now, that can flip. That script will flip. It takes a pretty interesting, maybe a bear market sometimes, to actually flip that script completely. But we've actually seen some strength in the utility sector, a little bit better than the other two defensives, mainly because of what's going on in AI, data center build out, and infrastructure build out. That's okay. So now you understand what you're looking at. This is, again, the defensive sector. And if I just look at another screen here, I'm not sharing it, but just kind of looking at what's going on. The defensive sector, like utility, year to date, it's up about close to 13% or so, 12.8, 12 and 3/4 or so, not including today's move, which is a down day here. When I look at healthcare, it's trailing utilities, just behind that, about 11.5%. And if I scroll all the way down, I can see consumer staples is basically break even, kind of squeaking out maybe a 0.5% gain. Again, that's before today's close. Now, what is that telling me? That's telling me that, they're not doing terrible. You weren't wrong for being in those. But versus the S&P, you can see that there's the relative strength just wasn't there. And that's really not the place to be. Now, I'm going to flip the script and go look at the offensive side right now. Let's look at that screen right now. All right, now here's the three risk-on sectors. Again, I call them the offense sectors. You've got technology up here versus the SPY. You can see when that started to move higher. I talked about it just in the beginning of this video. This is that April sell-off and started to move higher into May. Y is your consumer discretionary. Again, your wants, not your needs like the staples, but the consumer discretionary, what you'd spend your discretionary income on. And this has actually been much more in a downtrend versus the S&P. However, if I look at the actual return for the year, the discretionary is only up about 8.5%. And what's that tell you? That tells you that the two defensive sectors of healthcare and utilities actually outperformed so far this year, are outperforming the discretionary side of things. That's interesting. So you've got tech, obviously the number one performer year to date, up about 27.5%. And down below, communications, XLC, also up 20% plus for the year. You can just see that the trend lines versus the S&P were a little bit more firmer to the upside. On the top one here, XLK, the technology, and the bottom panel, which is XLC. This middle one, this consumer discretionary, again, not down for the year, just kind of being a laggard in the middle of things. But again, from a sentiment indicator, you can take these ratio charts, you can build them on a lot of different systems and look at what's going on versus the S&P. But as I said, consumer discretionary is actually trailing two defensive sectors. That's not really an indicator of much, but it does tell you that the defensive sectors were catching more of a bid than most people anticipated, but it's something to pay attention to. But now you understand how to look at offense and defense and see which one's really on the field and really in the game. And so far this year, it's obviously been the offensive side of things. Now, that can change, but when that script does flip, you got to be able to read it and understand it. Hope this helps. I'll talk to you real soon.